Welcome to the Profit Answer Man, Christian Brim. It's great to have you join us today.
Thank you very much, Rocky. I appreciate it.
Can you share a little bit about yourself and your business?
Sure. I'm the CEO of Core Group, and we help folks in creative industries work with their finances. So, be a financial guide to help them, pay less taxes and grow more profitably.
It's funny because I've always thought with creatives, along with a couple other groups, when it comes to money, they're like oil and water, right? They don't mix.
They don't. As I said, they have an aversion to numbers for sure. I think it's partly the way their brains are wired. But I also I've I've always viewed accounting as more of a language. People say, "Oh, you're an accountant, you must like numbers," and I'm like, "Well, yes, but accounting rarely goes beyond arithmetic, right?" So it's not that's not the aspect of it that's a challenge. The aspect of it is understanding what the numbers are telling you, and in that way, I think it's more equitable to a or equivalent to a language. And like a language, a business owner needs to have some rudimentary understanding of the language. You don't have to be fluent in it, but there are some words that you need to know.
That there are. And my favorite one is profit, because if you're not making profit, then, you're working
Yeah,
too hard for too little. So, how did you learn about profit first?
sure. So I met Mike McAllowitz at an EO event, Entrepreneurs Organization here in Oklahoma City, right after he published Profit First. I didn't realize until much later that that was not his first book. But in any case, he did a presentation and met him there. And shortly after that, I joined the Profit First Professionals Group.
And you, like me, are certified profit first professional.
Correct.
And so we help people implement that system. So let me ask you a question. How did that work out in your business? Did it help you at all?
Yeah. So about that time was when I heard Mike McAllowitz, was when my business was hitting a ceiling. I had two partners, minority partners. One was my brother, and the underlying business problem was that one, we didn't really want to go the same directions. We weren't really all interested in going the same place. But two, we really didn't have enough profit to support three partners. And so in implementing profit first, it kind of, well, it didn't kind of, it really revealed some fundamental problems in our business. And actually, rather than fix the business, I at that point I was so frustrated with the business that I turned it over to my brother to run, and I left and started a software company for 2 years. So it wasn't until I came back to run the business, negotiated the exit of my partners, and did some other fundamental changes to the business that I could actually implement profit first.
Not easy if you don't get buy in, right?
No, not at all. Not at all. And again, it wasn't that they were averse to implementing profit first. I don't think they really had bought into, the mechanics of profit first is simple, right? It's the mindset that's the challenge. And really, I was telling another business owner this, the was actually struggling with this idea of taking money out of the company. They had made a profit, and they were hesitant to take the money out to spend on something personal. And the experience I shared with them was that, until I started treating my business as an investment, as a real live business investment, I didn't make the changes that I needed to. And it's kind of like if you turned your money over to a money manager, an investment advisor, and you and the application was in this case that um, they didn't return any dividends to you, would you be happy about it? And the answer would be no. Like if the company made money and they didn't distribute it to me as an investor, I'd be unhappy. But that whole mind shift of thinking of your business as an investment, having an expected return on your capital, having an expected return on your revenue, all of those things, it's just a paradigm shift.
I have this conversation with business owners all the time. I'm like, you're not a bank. Stop lending people money. And
Yes,
that goes for when they lend their clients money. But then they ask me that same question, which you've kind of alluded to, is how much should I reinvest into my business? And
right,
they want to make all these investments in the business. And I'm like, okay, couple things. If you're going to make an investment in the business, what is your expected return? How are
right,
you getting paid back? Because you've been investing in this business for the past X amount of years and you've never gotten paid back. You haven't had a single loan payment.
right.
So, what are we doing? Are we investing in the business or are you buying stuff for vanity or whatever it is that you're buying it for?
100%. And when I have those conversations with people, I'm certified as a CPA, but also within the CPA of accredited in business valuation. And so we start having those questions about expected returns. And I said, do you realize that for the risk you're taking, you should be making 35-40% on your capital? And their eyes like, no. And I'm like, well, if you're not getting those types of returns, then you shouldn't be investing in your business. You shouldn't be putting more money into it.
And I agree with you. As a matter of fact, what I also like, just from a tax strategy, is if you're going to invest in your business, and depending on the kind of business, that investment might be real estate in an office, it might be capital equipment and so forth. I'm like, well, how about we actually create a leasing company and you lease your business all
Yes.
this equipment so that you can get a monthly payment for all of that stuff instead of paying somebody else a lease
Right.
fee or the bank their interest. Why not be your own lender? Because then you get to keep even more and you get certain tax strategies and so forth. But I think that is a massive mindset shift, as you've talked about, in how we view our business. At the end of the day, this business is here to serve me and make me money. Otherwise, it's a hobby.
Right. So I think initially for entrepreneurs, it shows up as a separation of you as a person and then the business. It's not just a job, right? You have a functioning business that works without you. You have processes, you have employees. There's, things keep running when you're not there. It keeps making money when you're not there. That's a business, right? Most people that are entrepreneurs, especially when they're smaller, they really just have a job, which is fine. I'm not begrudging that, but if you make that mind shift of if you're happy with a job and it's making you the lifestyle that you want and giving you what you want, great. But if you want a business, a saleable asset, it can't be you.
Well, so there's two things there, and I was laughing as you were speaking. If you have a job, which I agree with, because honestly, I have a job, I better get paid for the job a market rate, right?
Right.
And I think a lot of business owners don't pay themselves a market rate for their salary. They're
No.
they're underpaying themselves on top of getting no return on their investment. And you said, the business runs without you, and I kind of laughed because most business owners are the bottleneck in the business.
Yes.
it's it runs well when they're not there, but not when they
Yeah.
are there.
Yes, and frankly, that's a lesson that I struggled with for a long time because my Puritan work ethic that I'd been raised with, I thought that I needed to be working more, but the reality is, and understand, this is not something that I learned long ago. This is something I learned only in the last couple of years, that the less I work, the more productive my business is. Now, there's some things that have to be in place, right? I mean, if you've got a job and you walk away from it, it's not going it's not going to continue happening, right? But if a business should run without the CEO. I mean, if the CEO is involved in all of the day to day, then I'd question whether you have a good business.
And I agree with you. Now, you tend to focus on creatives.
Yes.
Is there something that they face more so? Because I think you touched also a little bit on the mindset around numbers as well. What have you seen in working with them?
So I think the biggest difference that creatives come to the table with that the average entrepreneur doesn't struggle with is this concept of passion. I explain in the book, I was introduced to this concept a few years ago by Perry Marshall, author of 80/20 Sales and Marketing. And he explained that there are builder entrepreneurs and there are artist entrepreneurs. And builders see an opportunity in the marketplace and they see a way to make money, and that's their motivation. But a lot of business owners are artists and they're driven by a passion. They have some passion that motivates them. And so whereas a builder will look at an opportunity and see an opportunity to make money, the artist will say, well, yeah, I can see that opportunity, but that doesn't light my fire. I have no real interest in doing XYZ. And Perry said, well, Christian, you're an artist. And I'm like, okay, I'd never really thought of myself as an artist, but I definitely believed that I was passion driven, right? So I think the problem that the creative entrepreneur struggles with is, you've got to have a business that makes money, but then the third component is, do I really want to do it, right? And I think that a lot of creative professionals, creative entrepreneurs get get caught up in this false paradigm that they can either do work that makes them money but is soul sucking, or they can do what they love and starve. And the reality in my experience is, and what I promote in the book is, that's a false paradigm. The true paradigm is that creativity is the source of every entrepreneur's profit long term. I mean, like, you might get lucky, but every entrepreneur, whatever their industry, is bringing something novel to the market. It might be a different location, it might be a different service, it might be a different price point, different features, whatever. But they're bringing something new to the table, and the creation of something new is what drives profit. So, my message to the creatives is, you don't have to give up your passion. You just have to apply that creative energy in a different way,
I think of myself as more the creative side,
right?
but I have fun doing what I do and I make money.
Yes.
I
Yes.
don't believe that I don't believe that you can't. I mean, I don't know why they keep talking about starving artists, because there's some very wealthy artists.
Yes.
And
Yes.
who's
And
that?
and
Taylor
but
Swift?
you even see that in, like, the mega stars, and it's like, or oh, Taylor Swift sold out, or whatever. But it's this idea that the creativity is not profitable. Now, I'm not going to say that you can't do things creatively, enterprise value, no economic value. Absolutely, we call those hobbies, right?
Hmm.
And there's nothing wrong with that. But applying that creative energy to your business is not a negative. That's actually the way to make profit.
When I look at an iPhone, I
Yeah.
think of that as a work of art. I mean,
Yeah.
he truly created something that was life changing, and it was literally a work of art. Because if you look at the cell phones before that, they were all ugly and clunky, and
Right.
and he changed the paradigm with that, and they are, I think, one of the most wealthiest companies out there.
I
And
use
it's
Apple as an example in my book. I mean, because when the iPhone was created, it was truly novel, right? There was nothing like it. And I discussed that in my chapter on value pricing and really the power of pricing to drive profit. And if you come up with a unique solution to a problem, in some cases, like the iPhone, where they didn't even know they had a problem, right? Um, you can command whatever profit you want.
Let's talk a little bit about value pricing because I love the concept of value pricing. And I think for a lot of people, business owners, they don't always understand the value that they deliver.
No,
And they get into this pricing trap. I try and tell my clients, let's work to be the most expensive, right? Because then you can get the best clients and you can have fun and you can truly be an artist in what you do, whatever it is, and you're not so constrained anymore. But I think a lot of people struggle with that mindset and thinking, well, are people really going to pay me? And can I bring that kind of value and so forth? And in other words, and I know when I first started, I had the thing, it was stop judging what other people are willing to pay you, start putting your offer out there and let them decide. It's not your
yeah.
place to
Quit
say yes or
negotiating.
no for them.
Quit negotiating with yourself.
Yeah.
Yeah. Yeah, no, I 100% believe that, and I think, and I've experienced it personally in our company, and I think it falls back to fear. I think you mentioned the loss of sales as a fear, and I was having this conversation with someone just the other day that they asked, well, if there was one concept that you wished all business owners knew more about, I said it's gross margin, hands down. Like I wish they understood their gross margin and what they can do to affect it. And it's easy to grow the top line, and that's what most business owners focus on, right? To use your example, the easiest way to grow the top line is lower your price, right? But what does that do to your margin, and what does that do to your profitability, right? You can sell a whole bunch of it if you give it away, but that's not why you're in business, right? So I think value pricing for me is again a mind shift change of stopping from looking internally at things like your time, your costs, whatever those are, and focusing on the value as the client or the customer perceives it. And that takes work a lot of times because you've got to have a deep understanding of the problem that you're fixing, right? And oftentimes I find when business owners start having those conversations with their customers and their clients, they realize that not just that, hey, gosh, I'm leaving a lot of money on the table, but the scope of the problem is usually larger than the service that they're delivering. Like they're only solving part of the problem, right? And the reality is the problem is much bigger, and maybe you can't affect a change on that, but maybe you can, and maybe there's even more profit and value to extract.
And I agree with you. And I think a lot of business owners don't actually understand what their value proposition is. Some
Mhm.
of them say, well, I sell pools. I'm like, yes, you do, but people really aren't buying a pool. They're buying the experience of the backyard and what the pool delivers. And so when you start to look at it differently, and also just the whole process, they don't just want the pool, they want a patio and they want maybe an outdoor kitchen and they want the landscaping and they want the lighting. And if you can come in and deliver everything and they don't have to negotiate with 10 different people and, oh, he's supposed to do that and he broke that, those people are willing to pay a very hefty price to have literally artistic backyard, right? Back to art.
Absolutely. I think the best example I was given, and it may have been in the book that I read that introduced me to value pricing, it was called Firm of the Future, and it was written by a couple of lawyers and a CPA out of Australia. It's an older book, probably 20 or 30 years old now. But they said you're not people aren't buying a drill, they're buying a hole. And so often we're trying to sell them a drill.
Hmm.
And that's not what they want. They want the solution. They don't want they want the outcome, not the way you deliver the solution per se. Like in your example, the pool, the process is absolutely part of the value. I don't want my yard torn up and trucks in my front yard and workers coming into my house to use the restroom and whatever, right? But um, truly understanding the value that you're delivering from the client's or customer's perspective is the key. That's where you start. I use the example in my book. I go through a couple of different examples on value pricing, but I heard the speaker. I don't know what event it was, but he was talking about pricing, and he all he did was he held up a bottle of drinking water, a bottled water, and like, how do you determine the price of this? And his whole thing was on how do you price water? And it was fascinating because if you think about water and how it's priced, it has absolutely nothing to do, unless you're like Coca-Cola and Dasani. It doesn't have anything to do with, one, the market, and two, what the water costs, right?
It's amazing what people will pay for water. You got to tell the right story in the right place at the right time, right?
Yes,
And well, and actually, if you're in the desert, people will give you their life savings for that bottle of
100%.
water.
Exactly.
That's making sure you're in the right place at the right time. Figure that one out, and you will
Yep.
make very, very good money. Are there any other things that you see business owners struggle with when it comes to thinking through their numbers?
Well, I think the biggest challenge, and I'm sure you see this, is the ability to find somebody that they can communicate with. I think accountants don't tend to be the best people, and we have a tendency to use industry jargon and lingo. And we educate our team. We don't use terms like depreciation or amortization. We don't when we're having conversations with clients, because that just makes it complicated. But if you're if I use the example of a physician. If the physician is brilliant, top notch, best schools, has all of the technical understanding, but she can't have a conversation with you to understand what your symptoms are and what outcomes you're looking for, right? Then her technical ability is useless, really. I mean, if there can't be communication between the patient and doctor, or the accountant and the business owner, then the technical expertise becomes a non-factor.
I get it. I'm married to a CPA, so I understand. And depreciation and amortization are non-cash, changes to the P&L, and what does that really mean? And I think yeah, it's taking that and converting it to simple to understand plain English.
Yes,
And it's funny because I came out of the medical side, and you know who the patients talk to and tell their real problems to? The
probably the
nurse.
nurses. Yeah.
Yeah, they tell it to the nurses, not to the doctor, because the doctor is so rushed and doesn't like they
Well,
don't
there's an
always have that
intimidation
rapport.
factor, and a
Hmm.
fear factor, and yeah,
Yeah.
yeah.
So
Now, go ahead.
no, it's just overcoming that.
Yeah, and the accountant that has those conversations with you can then give you advice, as opposed to giving you advice that may or may not be what you need. It might not be bad advice. I mean, so the one I run across that's ubiquitous is, well, I bought this equipment, or I bought these vehicles last year because my accountant told me to, because I was going to owe a lot of tax, right? And not that that advice is wrong technically, right? It
Technically.
but it's misguided, right? So my question to these people is, okay, did you need the equipment? Well, no. Then why did you buy it? You spent a dollar to save 30 or 40 cents. You still lost the 60 cents. Like, what if you're just looking to write a check? Write me a check. I'll take it. Yeah, I mean, like, it.
I object. Write me the check.
Write Rocky a check. I don't care. But like, the business purpose has to drive the tax advice, right? If you don't want it to be the tail that wags the dog.
And going back to our earlier conversation, is there a return on that spending?
Exactly. If you don't have a clear return on investment of that spending, don't spend it. I don't know. Are you familiar with Greg Crabtree? He wrote Simple Numbers.
Yes. I'm trying to think if he's been on the podcast, but I'm familiar with the book.
Yeah. So first of all, and I've told Greg this myself, is like, this says simple numbers, but it's not really simple. Um, but it's simple to him, right? And it's simple to maybe you and me. But one of the benchmarks he uses in the book, his book, and we strive to implement in our business is, yeah, there you go, is to have a minimum ROI on internal spending of 50% in 12 to 18 months. And that means that within 18 months, if I spend, I'm going to see an additional $50,000 drop to my bottom line. And if I don't have a clear path from point A to point B, I'm not spending the money, because it's way too easy. And I did it for so many years, so I can attest to how easy it is to use that excuse of spending money to, quote, grow the business, end quote. But growth and profit are not mutually exclusive.
No, they're not. They can go opposite. I can't tell you how many people who work harder and harder and make less and less. And that's why our motto is work less, make more, because I don't want to grind it out. I see no reason to do that. The one thing that I love that Greg talked about was the concept of a salary cap, kind of like baseball teams or football teams have that salary cap. And he's like, hey, if your business is X, right? And I forget if he had a specific percentage, but and it varies by industry. He's like, you've got a salary cap, and this is it, you know, and you've got to figure out how to make the hires within that salary cap and who you're going to spend on and who you're not, and holding people accountable. At the end of the day, let's face it, if you've got an employee, they also need to bring a return into the business. If they're
100%.
not bringing value, why are you paying them? And I know this gets really hard, and you already talked about it when you're in business with your family, because all of a sudden they think, oh, you got all this revenue, we deserve it all. And you're like, you do nothing, you mess everything up, you drive me crazy at Thanksgiving, and nobody would pay you what I pay you.
Right. No, I think there's two aspects of that. So Greg's discussion about direct labor efficiency, I think, is probably the most powerful part of that book,
Mm-hmm.
um, because if you're not, and direct labor efficiency is simply your gross margin divided by your labor cost. So it's essentially how much profit, gross profit, is your labor earning you. And managing your labor cost is, I mean, it's absolutely critical. I mean, and if they're not making you money, they have to go.
And so we create, like, profit first is the base,
Hmm.
kind of it's one small part of what we do. Our bigger thing, though, is to create dashboards so they have clarity on all of this. And every month I will tell my business owner, hey, this month you spent $1 on your employees and they brought this much to your business. So for every dollar you spent on an employee, they brought $2 in revenue, or 250 in what you talk about gross profit. And so that they understand, hey, and when it gets negative, it's like, hey, your people aren't productive enough, you've got to do something different.
Yeah, they might need to be different people. They might need to be reorganized. Maybe they're not clear on what they're doing. But yeah, and every time we're doing forecasts internally for our growth, and they're like talking about hiring plans, it's like, okay, how does that fit into the DLE? Like, the DLE is not moving, so you don't get to hire anybody. That hard stop. I mean, there's no conversation about hiring people if our labor efficiency is not going up.
And I'm with you. And if it's not, we hire after the fact, not before the fact, because you never know if the fact is going to become the fact.
That
And
that's
so
the
you have to
the
be careful.
the axiom of hire slow, fire fast.
Yeah, and that's what all big companies do. They start losing revenue, they start cutting staff. Everyone tells me, oh, but. And I'm like, you can't, payroll will very quickly wipe you out if you don't have the ability to adjust. And what we like for our business owners is we try to put in a flexible. So, like, okay, here's our core people, and then here's our flex people, and here's our outsourced people, so that you can deal with the ups and downs of revenue every month by flexing into some of those other people and not affecting your core base.
Yes. And the second thing I was going to say about that is I think it does work a little bit the opposite for smaller businesses, because I think that they are hesitant to delegate. And
Mm.
the way that was explained to me early on, I was considering hiring an accountant, and I was having this conversation with a colleague, and he said, "Well, how much would this person cost you?" And I don't know, let's say it was $70,000 or $50,000 at the time. And he said, "Well, if you don't hire them, you are working for $50,000 because this person was replacing what I was doing, right?" And going back to your comment about paying your self market rate, I think when you're a newer business and you're trying to grow, you actually have the opposite problem because you're not willing to go ahead and delegate those lower value things that free up your time.
All of this stuff comes back to emotions, right? The
Yes,
money, the delegation, everything, the value pricing, it all comes back to emotions. And I think that's the part that we rarely talk about is all the emotions in money, the emotions in business, your past relationship with math and money and how that affects your business. And that's why I think we're super focused on understanding the business owner as a person and their beliefs and their patterns so that we can help bring about those changes so that they can let go and they can try new things and they can work less and make more.
it's absolutely possible, Rocky.
That we know. So true. If people would like to learn more about you, if they're in the creative space and looking for support, what is the best way for them to find you?
Well, if they want to connect with me or buy the book, I would go to Christian Brim. And if they want to reach out to us at Core, it's Core Group US.
And just remind everyone, what is the name of the book?
Profit First for Creatives. Available
There
in
you go.
ebooks, paperback, and now hardback. So, and the Audible audiobook will be out in July. So,
Nice. Thank you so much for joining us
thank
today.
you, Rocky. Appreciate it.
Thanks for listening to this unedited video of the Profit Answer Man podcast. If you'd like to catch the full episode and learn more about what we do, check us out at profitcomesfirst.com. We also go through the Profit First book in each and every chapter in the beginning episodes of the podcast, so check those out as well. Thanks for listening, and here's to you having a more profitable and growing business.